But the next part of the Bitcoin investment thesis I call the macro. And the macro is thinking about why I would want to invest in Bitcoin from a value perspective. And that's where we look at this limited supply cap of 21 million Bitcoin. There will only ever be 21 million Bitcoin. Currently, we've mined about 19.5 million Bitcoin, so there's 1.5 left to go. And that will be between now and the year 2140. So they're going to come out much, much slower. And so there's a very limited supply. We've seen an incredible increase in the supply of fiat currencies, dollars and euros and yen and everything else in the world. And if you have a limited supply of fiat, or say an unlimited supply of fiat that keeps going up and a limited supply of Bitcoin that holds there, thesis is that you want to hold your assets in something that is a limited supply. In the past, that thing has been gold. Actually, in the recent past, it's actually been dollars. People have stored their value in dollars. That's been their inflation hedge. However, with interest rates rising, with the incredible amount of dollars that have come into existence recently, that cannot be taken up by the amount of production or products or goods or services in the world. Therefore, we've seen inflation. Well, again, Bitcoin is not inflating. We're not increasing the number of new Bitcoin. We're decreasing the number of new Bitcoin. That's where we talk about Bitcoin as an inflation hedge or a store of value. If I know in the future my expenses are going to go up, which is called inflation, I want to be able to hold on to an asset that is not dollars, because if I hold on to dollars, then I'm not going to be able to buy as many goods and services in the future. I want to hold something that is the limited supply, just like the goods and services that I'm going to buy. And therefore, I might want to hold something like Bitcoin or a store of value. Again, in the past, that's been gold, because we have a decent knowledge of how much gold there is in the world, and therefore we can kind of price it appropriately. The problem with gold is it's harder to store, it's harder to own. It's harder to own in a kind of self-custodied way. It's hard to transport, it's hard to pay for things with gold. You can't like flick off little pieces of gold to pay for things. It's not very easy to take with you when you go somewhere. Bitcoin breaks down into 8 decimal places. Bitcoin can be held on a wallet where you can transact anytime you want. So what we've seen is hedge fund managers, macro hedge fund managers like Paul Tudor Jones, like Bill Miller, like Stanley Druckenmiller say, look, I want to own an asset like this because it's verifiable. I know how many Bitcoin there are. I know where they are. I need to store value because in the future, I think expenses will go higher and we will need some sort of asset to offset that. The assets they've chosen are gold and Bitcoin. So that is the macro investment thesis. When you go overall in the world, there are more dollars, euros, yen than there were several years ago, but there aren't that many more Bitcoin. The number of Bitcoin is growing very slowly. Therefore, I want to hold my value in an asset like that, like Bitcoin. That is the macro investment thesis. And that is a long-term investment thesis. It's not a 1 or 2 year investment thesis. It's not one where we say inflation happened and therefore the price of Bitcoin goes up every time we see inflation pump up a little bit. It's something that takes time, because when we see inflation, oftentimes the value might go down initially. The value of Bitcoin might go down initially, because what it means is people don't have extra money at the end of the month to invest in Bitcoin, to invest in anything really. But over the long term, you're going to see more people allocating to Bitcoin because it's going to hold its value better than dollars and better than most other assets.